Ladies and gentlemen, what's up to everyone, and welcome to another edition of This Week in Crypto. I'm your host, Brian, alongside my co-host, Dino. Excited to get into another week of metrics here with everybody. For those of you who are not familiar with our metrics, we cover the most comprehensive amount of on-chain and social metrics in the world, and we plan on jumping into as much as we can today. And as always, we'll be taking that last half an hour to go over your questions, make sure that you are well up to date on what is happening in the markets, which have mostly been looking quite positive. Our metrics that we'll be going over today are not intended to be investment advice, so keep that in mind. And we will start here with our screener, as we always do. Looking at the screener, we see that Bitcoin is back up to above 47.5. Actually, looking in, I can reactivate, of course. Let me know that everything is okay.
I can see it on my end now.
Perfect. Perfect. So we're looking at the screener. As I was saying, Bitcoin is above 47.8 actually in real time. Looking at the chart, Ethereum is back above 32.5, and we had several altcoins, as you can see by these giant green bars, just absolutely go wild this week. It's really our fourth or fifth straight week where we've seen at least a pretty legitimate surge from the altcoins, and this week was no exception. In fact, this is probably the first week of those 4 or 5 where we've seen multiple ones at or near 2x range. And this is just the top 100 or so. You can see that AVAX here got to a plus 102%. We had Terra at plus 68%, Solana at plus 64%. These latter two here spent time over the last couple days in the top 3 of our emerging trends, which we'll be touching on here in a few minutes. And the significance of that. And then we also had, of course, Audius, Phantom, Arweave, and Revain having nice pumps of their own. Helium here, also worth noting. Overall, extremely good week for altcoins, and boring week if you were mostly in Bitcoin and Ethereum. So the conservative route is basically a frustrating one right now for those who are kind of expecting a drop or a little bit of lull in the markets. And really what we've seen so far is a continued push from those alts that really were hammered in May and June, and recovering back to where they were back when Bitcoin was at that all-time high level in April, and Ethereum was at that all-time high in May. So anything else of note you'd like to touch on as far as price changes go before we move on, Dino?
Just the fact that Bitcoin's drop over the sort of midweek has left quite an impact on its social metrics. Like last week, I think we talked about the fact that pretty much all coins, but including Bitcoin, the crowd was very bullish on. So the crowd is no longer that bullish on Bitcoin, at least according to our metrics. And I know we're going to touch on that in this video, but I just wanted to mention that there's still a whole lot of bullish sentiment on the market, but it's mostly towards alts. It seems like the crowd is kind of turning on BTC a little bit, which I think isn't a bad thing at all, at least for BTC in the short term. Like Bitcoin is continuing to lose market dominance, but it's also continuing to lose social dominance. The amount of chatter that is sort of distributed or that is connected to Bitcoin as opposed or compared to anything else in the top 10 coins is starting to shrink. And that, in the past at least, has actually been a relatively good signal for BTC because it suggests a lack or sort of an absence of market euphoria, irrational confidence. So it seems like the drop that happened on Wednesday has spooked a lot of people, even though it honestly wasn't that deep. But almost immediately, our social metrics kind of reverted back to bearish, where they stand by at the recording of the stream, while everything else, Polkadot, Solana, Cardano, all of these coins are breaking all-time highs when it comes to their social mentions, when it comes to their social sentiment or the average mood towards these coins. So those are the coins that I would be a little bit concerned about, at least in the short term, because there seems to be a little bit of a heating of their social metrics. But Bitcoin is actually starting to chill a bit as far as the retail interest and retail sentiment. So that's something that I would be hopeful because of in the next couple of days, Brian. But yeah, we can start with Bitcoin's maybe on-chain metrics and then segue into social metrics, not just for BTC, but for pretty much anything in the top 10 coins, because it's been quite an interesting week for our social data.
Yeah, absolutely. We can look into how a few of these mini metrics or these metrics have been in comparison to that mini dip that just kind of happened right here before a lot of people kind of got bear trapped. And, as far as daily circulation goes, it's a continued downward slide here. I'll get rid of Ethereum for now. This small line here is the 7-day average, and these bars here are the actual true 1-day circulation. And we can see over the past, week or so, maybe even 2 weeks, it's been a pretty big slide, especially coming all the way back to late July when we were actually seeing a few peaks that were pushing up the price a little. It's been kind of a bearish divergence going on. And really quick, I'll segue into our model, which actually measures this circulation here on Bitcoin. And we can see exactly what that's representing here compared to market cap. For those who aren't familiar, this model here will measure the amount of token circulation divided by the market cap that Bitcoin is sitting at that given time. These hash marks here, I know someone asked a question about it pre-call, is measuring what each of the past few days have done, with this white line 1 day being what the circulation was yesterday in comparison to market cap, 2 days ago compared to market cap, 3 days ago compared to market cap, and then the average of that week from 4 to 10 days ago right here in black. And they're all well above the August average, which is already red. Above, in this case, is bearish. We want the bars to be lower and under these trend lines. And right now, we're basically seeing very, very low values going back to this chart here, close to 6-month lows, guys. I mean, we're not even talking about just 1 day like this. We're talking about groups of days, the last 4 or so, being very close to that low level. If I could put an average bar here, I would. But you can see here from the 7-day average, it's refreshing. 7-day average, there we go. It's kind of on a slide down. We can do something like a 200-day average and look at it that way. You can see the constant slope down as time moves on. So one key to getting Bitcoin back to its all-time high and beyond would be to see a clear sign of this going on, these going on, multiple days where we're really starting to get some traction and momentum. But right now, most of that is with altcoins, as we mentioned on that screener page, and we'll jump into that later on in the call here. But moving toward some of the more interesting on-chain metrics, we can also look at MVRV here.
Actually,
very
let's, Brian, while we're talking about the daily circulation, let's also just, because it's connected to it, let's also briefly talk about daily active addresses, because I think those two metrics kind of go to hand in hand. Basically, token circulation, the only thing that it really tracks is the amount of unique Bitcoin that is being moved on the blockchain. And obviously, that's been in a state of decline. Not surprised at all. I think a lot of people are moving into alts, shifting into alts. The trading volume for Bitcoin is down 9% on the last 2 weeks. So it's more than understandable that the on-chain circulation is also, or the on-chain volume is also going to be affected. Overall, it seems like the market, or the retail sector in particular, is moving slightly away from BTC and into other coins for the time being. Now, on Sunday, or actually on Monday, I wrote a weekly report for BTC where I was actually quite optimistic about Bitcoin's on-chain activity, especially because of this rise in daily active addresses, right? So this latest peak, Brian, I think it was on Monday, at one point we broke 1 million daily active addresses. And this is the first time, there we go, just there. So it only lasted for a minute or two, but this is the first time that Bitcoin's daily active addresses have gone above 1 million since mid or actually early
June,
early July.
Yeah.
So it's been a hot minute for Bitcoin's daily active addresses, and actually, if you can zoom out a bit, maybe to the last year, and let's just see. All right, we're now at about 47K, 46, 47K. That's sort of the range that we are in. What was the last time that Bitcoin was at these price levels? What was the amount of addresses daily interacting with Bitcoin? So to kind of get a sense of where we are now compared to where we were, where there was a lot of interest and sort of a bullish momentum and network momentum behind BTC. So as you can see, anywhere between 1 million 10, 1 million 20, even at its peak 1 million 30 addresses is where we were the last time that Bitcoin was at this price point. While both the network and the retail sector has sort of been extremely bullish towards BTC, and it has shown on across the charts, both on the blockchain level and on the trading volume level. At the moment, however, we're still some ways below that level, and that remains a concern. However, at the very least, what I've seen, before this week was that Bitcoin's daily active addresses have started to recover. They have grown by about plus 28% in the first 2 weeks of August. So I was hopeful when I wrote the weekly report on Monday that this trend was actually going to continue, and that by the end of this week, we would be back to maybe, I don't know, 1.05 million, even 1.1 million daily active addresses. I thought that would be a pretty strong validation, or a pretty strong argument in favor of more people moving back into BTC, new blood flowing into the market. I think it's flowing currently into alts. So from an on-chain perspective, this last week has not been a great one for Bitcoin, just because there's a lot of different coins that are taking away attention from the top coin. So what I would like to see is, if we want to see Bitcoin's sort of a strong recovery and a strong bounce back above 50K, I would like to see Bitcoin move back to sort of a standard or a normal level of at least 1 million daily active addresses for a week. Like, if we can have a week straight where there's at least an average of 1 million active addresses, I think that would be a very strong confirmation that the crowd is back and that the retail money is back into BTC. For the time being, it seems like it's shifted away or shied away from BTC and into Polkadot, Cardano, all of these other projects that have been pumping like crazy. I mean, the retail goes where the money is and where the trend is. And, for the time being, the trend is not in BTC. So, yeah, not great on-chain metrics, like network-wide metrics for BTC in the last week, but it's not really much of a surprise. I think once we see these alts, or if we see these alts start to taper off, this is probably going to change on a dime, and we're going to see Bitcoin's daily active addresses once again start to flourish, hopefully, because it's not the first time that it's happened, that we had a sort of a couple of weeks of an altcoin season, and all of a sudden Bitcoin's market cap dominance drops, Bitcoin's on-chain dominance drops. However, once everything goes back to normal, people flock back into BTC, and once that happens, I think there's a good argument to say, all right, we have fundamental support for a breach above 50K and 60K. At the moment, though, that's just not the case, unfortunately.
Yeah, it's, as Dino's saying, the mild rise here toward the early part of the week was encouraging. Having it sort of stagnate where it is now, not the greatest thing, especially when prices are rising and active addresses aren't. But also, as Dino said, with cycles in the past, we typically see, these altcoins flourish while Bitcoin can tread water, followed by some sort of altcoin drop, a mild to mid-sized correction, and then much of the market cap and active addresses going right back into Bitcoin, which causes the actual crypto markets to pump more naturally and gradually, with altcoins following Bitcoin's lead instead of Bitcoin hanging out in a range while altcoins dance all over the place. So it's an interesting spot there for address activity. Circulation obviously looking a little bit worse. Those two metrics are, two of the top 3 or 4 metrics we typically look at for a direct validation for where prices are going next. So anywhere from neutral to a pretty notable concern right now for those 2 metrics. Why don't we were talking about mean dollar invested age before we go back over to MVRV, Dino.
Sure.
And
yeah.
what we're seeing now is kind of a resumption of mean dollar invested age rising back up again.
Yeah. I mean, once again, completely expected. So, Brian, if you want to zoom out to the last 5 years of data, just so we can show people, for people that are unfamiliar with this metric, essentially what it tracks is the average age of all units of Bitcoin that are on the blockchain, adjusted for or by the price at which they were initially acquired. In very simple terms, what that means is that the rising slope of mean dollar invested age points to a period where the average age of bitcoins on the network is rising. I mean, bitcoins are getting older, meaning that they are not moving between their respective addresses. So that points to a period of dormancy on the network and sort of an end of a redistribution cycle for among BTC holders. And so when you see these drop-offs, these large drop-offs in Bitcoin's mean dollar invested age, like we've seen at the beginning of the rally and all the way up until the May 12th correction, what that points to is the sort of youngening of Bitcoins on the network. So the average age of units of BTC is going down, meaning that they are more actively being transferred between addresses, and as a result, it points to a period of redistribution and value reallocation on the Bitcoin network. And in general, that previously seems to have been the bullish trend for BTC. In both 2017 and 2019, Bitcoin's mean dollar invested age has started to slide down somewhere in the middle of the rally, suggesting that in fact we are seeing a lot of value being transmitted on the network, and as a result there's sort of a fundamental justification for the rally. Once Bitcoin's mean dollar invested age has hit a bottom and started to move in an upward direction, both in 2017 or early 2018 and in 2019, it has sort of marked the beginning of a bearish cycle for BTC. And this is why we are sort of slightly concerned for Bitcoin's price action over the next couple of months, at least, is because Bitcoin's mean dollar invested age has been moving steadily upward. There was a short blimp where it stopped moving upward for about 5 or 6 days, but that's mostly been caused by 1 or 2 very large transfers of very old coins. So it was more of an outlier than sort of a sort of a reversal of a trend or whatever. So for the time being, Bitcoin's mean dollar invested age continues to rise. All that really means, and you can make your own conclusions what that then sort of implies, but all this means is that the average sentiment of holders is to not interact with Bitcoin's network at this point in time. On average, the main sentiment is move into dormancy, hodl, and don't really exchange BTC on the open market. Don't move Bitcoin between addresses, and sort of shy away from active market participation. Previously, an absence of market or network participation has not been a good sign for Bitcoin. And that kind of makes sense, right? If you want to create a payment system, then you do want the users of that network to interact quite actively with your coin. Since the correction, there has been a clear pivot towards dormancy, and that remains a concern. That being said, this is a very long-term indicator. This is an indicator that you look on a sort of 2 to 3 year scale. So it doesn't mean that Bitcoin can recover to 50, 60K. Like, as you can see, Bitcoin's mean dollar invested age has started to rise in May, and then we still recover to where we are right now, right? So it's not a nail in the coffin for Bitcoin's short-term price action, but from a macro perspective, as a macro indicator, yeah, it's concerning. It just means that people are no longer actively interacting with BTC on a network level, and that definitely can be a cause for concern, Brian.
Right. I don't think this is necessarily the beginning of an uptrend that looks, as long as the one in 2018 to 2019 that went on almost a year and a half. But as Dino said, it's certainly going to be a concern when we start to see consistent rising like this, just as it happened from May all the way until mid-July. We had that 5 or 6 day flattening period, which may or may not have contributed to the price being able to rebound halfway back to its all-time high. But now that it's starting to trickle up again, it's going to be interesting to watch over the next couple weeks if it's just constant step ups like this day after day. Another flattening period would be a really good sign. Typically, any reversals happen in tandem with some sort of flattening period. So it doesn't happen instantaneously. Usually there's something like this that happens. Even here, I mean, I'd have to zoom in a little more to show that it's flattening, but there's definitely flattening here. There was definitely plenty of flattening here in September 2020 when we started to really take off. That was the sign for a lot of people where you could instantly see that it was time for something to go right with Bitcoin. And then all of a sudden we have this huge plummet. So usually watch for a gradual tapering out of whatever direction the curve is going. And it's going to be a good signal. Right now, we had kind of a fake out here, like I said, but it's resumed for now, and we'll have to watch how the next week or two go, and then proceed with caution.
Yeah. So, Brian, we're about 20 minutes in. I think we should move on to two other metrics that we wanted to touch upon for the stream for Bitcoin. One being whales and what they've been doing recently, and then talk about Bitcoin's social data, because we do want to kind of leave room for audience questions as well.
Of course.
I think whale activity has been pretty interesting in the past week. So maybe show us what you're showing us here, Brian, or tell us what you're showing us.
Right. So this is the amount of Bitcoin held by addresses that hold between 100 and 10,000 Bitcoin over time. This is the past 6 months of data going back to February. 6 months ago, they were holding 9.08 million. Where they are now is 9.16 million. So a difference of about 80,000 in the past 6 months. But the volatility is very notable because as this tier rises, the price tends to rise too. And it has some leading elements to it as well. It's not just in real time. So for example, this dip here in early May, this was kind of the precursor to the big price dip that we still haven't recovered from. Bitcoin millionaire tiers, the millionaire tier as we call it, was holding 9.11 million on May 8th and then dropped all the way to 9.02. So a difference of about 90,000 Bitcoin between this 2.5 week period or so, and that had price following. Then after May 21st, this was essentially the bottom. It got all the way up to 9.23, a difference of about 210,000 Bitcoin. And price, after doing a bit of dancing and dropping here, was able to recover. Now, after getting to a high of 9.23, it's fallen back to 9.16, a difference of 70,000 Bitcoin just in the past week and a half. The price has not yet reacted to it, but if we continue to see a drop here or even a flattening out period, this would be a mildly bearish sign for Bitcoin's price because the 100 to 10,000 Bitcoin tier is not accumulating as they were for this long stretch here. Feel free to add on to what I've said, Dino, but essentially this is going to be the primary whale metric to look at in terms of the best price leading that we've seen.
Right. So one thing obviously to note is that while the balance of these addresses has declined in the past week, the balance of the upper group of addresses, so addresses holding between 10,000 and 100,000 BTC, has increased. Now, some people might consider this to be a bullish signal, simply because these are supposed to be mega whales, even larger whales than the whales that the two groups that we usually pay attention to. Two things that I would say about this. Number one, there's not a whole lot of addresses that hold between 10,000 and 100,000 Bitcoin. And also they are holding a less of a supply of BTC than the two groups that we generally keep an eye on, meaning that they have less of a sort of sway over the market action. So that's one thing that I would say. Number two, the second thing that I would say is that it is much more likely that the addresses holding between 10,000 and 100,000 Bitcoin are populated, or that those addresses are largely exchange addresses, or that a disproportionate amount of addresses holding between 10,000 and 100,000 BTC belong to exchanges. And you can kind of see that making sense when you look at the previous sort of dynamic of this group of addresses. So we can see several very large spikes in the balance of this group of addresses during both the April correction and the May correction. What that points to, and at those times we have also seen a massive spike in the amount of Bitcoin moving to exchanges. So putting those two things together, it would appear that when this group of addresses starts to increase, when their balance starts to increase, it is usually followed by the increase of the amount of BTC to exchanges, lending support to the idea that this group of addresses is likely dominated by exchange wallets. So when you see the rise in exchange addresses, it's not a great signal for BTC in the short term, because essentially what it suggests is that a lot of people seem to be, or addresses seem to be, moving their BTC to sell. So yeah, short term, another sort of iffy signal for BTC, just because. But once again, I think it's mostly just short-term tremors, and it's a part of Bitcoin, the larger holders just taking advantage of the altcoins rally. And moving back, sort of moving away from BTC in the short term to get some gains in, or make some gains in, I don't know, DOT, Solana, XRP, whatever, and then move back into BTC. I would not be too, for the time being at least, I'm not too concerned about the fact that we are seeing a drop in the amount of BTC held by these two categories of whales that we usually like to keep an eye on. Now, some of these metrics have been fairly concerning for Bitcoin, but all of it, I would say, is sort of to be expected because of the altcoin rallies that we have seen in the past week. One thing that I do like about Bitcoin's current standing, Brian, is its social metrics. So if we can look at Bitcoin's social volume and social sentiment, sure, we can start with social sentiment here. So this metric of ours, essentially what it tracks is the average mood of Bitcoin-related mentions on crypto social media. So for those that are unfamiliar, we currently at Santiment track about 1,500 different crypto-related social channels. This includes Telegram groups, crypto subreddits, Twitter accounts, essentially anywhere that we can find the main topic of discussions being cryptocurrencies, we try to listen in. So at the moment, I think we collect about 100,000 new messages from these channels on a daily basis. And so one of the things that we do with this data is that we collect all Bitcoin related mentions, for example, and then we pass it through a machine learning algorithm that we've developed that labels all of those messages as either positive or negative towards Bitcoin, or sort of neutral / ambivalent. So one of the metrics that we've developed with this approach is the one that Brian is showing right now, called weighted social sentiment. What this metric shows is the average mood of Bitcoin-related mentions on crypto Twitter in particular. So the reason why I usually, sort of default to crypto Twitter is that our machine learning algorithm has been built on Twitter's data, so it's usually the most reliable. The second reason why is because Twitter is one of the largest, channels for cryptocurrency discussions, and so in general, in my opinion, it has been the most reliable in spotting macro trends for Bitcoin sentiment. Anyway, looking at Bitcoin sentiment right now, we have seen over the last 24 to 48 hours, like I said, after this latest correction, even though it wasn't that deep for Bitcoin, before the correction, the average sentiment towards Bitcoin has rallied. It has shown strong uptick, and in general, it has suggested that the crowd is becoming very confident about Bitcoin's ability to break above 50K once again. And you can kind of see the rise of Bitcoin sentiment throughout the first 2 weeks of August. Actually, if you compare Bitcoin sentiment in July to Bitcoin sentiment in August, it's like two completely opposite pictures. It's like mirror image almost. So in throughout July and part of June, there was a massively bearish bias towards the top coin. A lot of people thought, I remember at the time, once we broke below 30K, most people were calling for 22K as the next support level. People were in panic mode, and that sort of shows in this chart. However, once we were able to recover from above 30K once again, and then above 40K, the general mood of the crowd has shifted by 180 degrees and has moved once again into a massively bearish territory. Massively bullish territory. Now, in general, Brian and I usually talk about this. These large spikes in sentiment, historically speaking, haven't been great for cryptocurrencies, or haven't sort of been a positive sign for the short-term price action for Bitcoin or any other cryptocurrency, because what it tends to show is that the market is becoming a little bit too excited for its own good. It shows that we're approaching peak market euphoria, and as a result that we may be looking at a risk of a short-term correction. And I guess that happened for Bitcoin in the sort of middle of this week, even though it wasn't really that bad, all things considered. However, once the correction happened, or once after the dip, the average sentiment towards Bitcoin has once again flipped and moved back into a predominantly bearish territory. Now compare this, Brian, to something like Solana or Polkadot. Can we look at their own sentiment at the moment? Let's start with Cardano, actually, because Cardano currently is experiencing a massive uptick in its price action. So let's look at what the average sentiment of the crowd is like. So it's still as you can see, sort of this ebbs and flows on a daily basis, but it's still sort of in a strong upward momentum. And the last time, Brian, that the sentiment towards Cardano was this high was right around its all-time high in May, right? So let's also look at Solana. What is Solana's social sentiment looking like this week? Also very high, right? What about Polkadot? Can we look at DOT as well? I would assume, actually, Polkadot sentiment is doing quite surprisingly low, which isn't necessarily bad for the coin. So Solana and Cardano in particular, they have been extremely hyped on crypto social media. Both of those coins have been in the top 3 words on our social trends this week, which essentially means that they have been one of the most discussed topics on crypto social media at some point in time this week. They were the prevailing market narrative. And based on some of our backtests of social data and our social metrics, these types of spikes in social mentions and spikes in social sentiment, historically speaking, indicate an increased risk of a short-term correction. It's not necessarily true that it's going to happen, but based on a couple of event studies that we have done, the average price performance of coins, of the coins after they end up on our list of top social trends, it drops by 10% over the next 2 weeks. And Brian, if you look at our social trends right now, I believe that the top word on our social trends is ADA or Cardano. suggesting that this is currently, at this point in time, the most discussed topic on crypto social media. We can also see that OnlyFans and porn is in there, obviously because of the news that OnlyFans is going to be sort of blocking any sexually explicit content. And a lot of people were talking about the fact that this might be time for Bitcoin and other cryptocurrencies to shine, because OnlyFans is doing this because due to pressure from bankers, right? But yeah, anyway, Cardano is currently the most discussed topic on crypto social media. Previously, when these massive spikes in social mentions occur, they indicated a risk of a short-term correction. Like if we look at right here, the last spike in the Cardano social mentions happened right at that local top there. Yeah, there we go, right at that local top before we started to peak and sort of range for Cardano. So not great. In general, the point that I'm trying to make is when we see high social sentiment and high social mentions for a coin, it's not a great sign overall. So the fact that Bitcoin sentiment has been dropping like a rock over the last 48 hours, and also the amount of mentions of Bitcoin, that we can show it maybe, Brian, really quickly, have stayed flat, suggesting that the crowd is no longer, they're not talking about Bitcoin anymore this week than they have been last week, while they have been, salivating over Solana and Polkadot and Dogecoin and XRP. So all of those coins their social dominance is increasing, while Bitcoin's is either staying the same or actually declining. So for BTC, yeah, some of its on-chain metrics aren't looking all that hot, gotta admit. But at least from a social perspective, I think it's a good sign that it's sort of not the biggest talking point on crypto social media. Previously, when it was extremely talked about, and when the crowd was extremely bullish towards Bitcoin, it wasn't a good sign for its short-term price action. And quite often it has actually coincided with either local tops or sort of beginning of a consolidation period. So I'm hopeful that this sort of bearish bias for Bitcoin actually continues into the next week, allowing us to maybe see Bitcoin sort of fly under the radar, so to speak, although Bitcoin can never really fly under the radar. But relatively speaking, allowing it to increase in price while the crowd is still sort of focused on alts. So that would sort of be, Brian, my analysis of Bitcoin as far as its social metrics are concerned.
Yeah, thanks, Dino. Not much to mention here on Bitcoin's social volume and dominance. Obviously, we looked at Cardano. I won't do the other 3 or 4 altcoins that have been surging for now, but they've shown a similar pattern to Cardano in the fact that they've each kind of had their time to shine in terms of these huge social dominance spikes here. And very often, those are the ones that end up leading to corrections. You can even see it in Bitcoin a little bit. When the dominance is high, price tends to drop, assuming that the dominance is because of a price pump. Every once in a while, you'll see an actual dominance spike like this. It's a little hard to see with the green and the blue meshing in, but the price dropped massively here. We have this big dominance spike and then price rises. So consider these dominance spikes as kind of a reversal indicator. Dominance in this case, the way we calculate, is the percentage of discussion related to that asset versus all other crypto words. So in this case, 8.37 there, 7.84 there, etc. So look at those spikes very closely because they're going to tell you a lot, combined with just an overall sudden climb in social volume like that. I'd say last thing we can look at, Dino, before we jump into questions would be MVRV. Okay. I still think it's a really good metric that gives a lot of indication.
While you're talking about it, Brian, I guess let's just let people know in chat. Guys, Brian is going to talk about MVRV for about 5 minutes, and then we're going to start taking some audience questions. So in chat, if you have a specific coin that you're interested in, and pretty much anything in top 10 is pumping right now, and a lot of coins in the top 100 are showing some very interesting social and on-chain trends, let us know what coins you're interested in. And we'll do some very quick, maybe 5 to 10 minutes analysis on its on-chain and social data right here live on stream. Now, I always say that we can take a look at any coin that you guys want, but if you want us to do deep on-chain analysis of a coin, make sure that you ask us about coins that we actually have on-chain data for. So at the moment, our on-chain coverage includes Bitcoin, Ethereum, all ERC20 coins. XRP, Litecoin, and Binance Coin. Those are the coins that we currently track on-chain data for. Now, obviously, we can talk about Cardano and Solana from other perspectives. We still have social data for those coins, development activity data for those coins, but we can't dive into things like active addresses, exchange inflow, metrics like that. So if you really want us to look into on-chain metrics for a particular coin as well, make sure that they live on Ethereum or they are sort of one of these coins that I've already mentioned. So go ahead, Brian.
Great, thanks, Dino. So what we're looking at right now is Bitcoin's 30-day MVRV. What this measures is the average returns over a 30-day period for Bitcoin traders, basically what their return is from their initial investment from 30 days ago. Doesn't necessarily mean it's going to follow exactly what the price difference was between now and Bitcoin's price change 30 days ago, but generally speaking, it will follow that trend a little bit, factoring in things like FOMO, FUD, and other things that cause traders to buy on the way up, sell on the way down, make mistakes, accidentally make perfect decisions, all of that. And what we look at are the extremes, because the extremes really tell us when a correction may be imminent or when a bottom may be imminent. And it is a very good indication when it comes to figuring out where prices are going to go next, because it's kind of a combination of on-chain and social tracking, because of the fact that people are naturally going to be more greedy when we're up here and more fearful when we're down here. So with that fear in mind, capitulation tends to happen when we see huge negative returns like we saw in the second to last week of May. The 30-day MVRV getting below negative 25% is usually a pretty good indication that the price won't go too much lower. And eventually, even with some ranging, we can get the MVRV back up to here. It actually went positive in mid-June, followed by an immediate drop-off again. And this was another extreme that kind of signaled around the bottom. We ranged here for a while, and then suddenly, through August, we'd been in the positive range, with the extreme getting all the way up to about 20% just about a week ago. And it's been ranging ever since. The MVRV currently sits at 13.1%, which is a modest concern, but not an extreme one, right? We look at like the plus 20 or above range as the extreme, or the negative 20% as the extreme. But anything in between, we're generally just within natural market fluctuation range. And the higher it is or closer it is to that plus 20 or negative 20, the more of a risk or opportunity it is. So right now what we're seeing is mild concern, nothing significant though, and prices can definitely climb. But if you see MVRV start to cross that 18 to 20% range or so, it's going to be historically a much riskier time to enter a position in Bitcoin. We also have
Brian, you might want to zoom out to the last, let's say, 3 years of data, because I do agree that historically speaking, that sort of 15% level on a 30-day MVRV ratio has typically been a point in time where we saw either a local top or a beginning of a consolidation for Bitcoin. So the reason for that being is that it seems like at this sort of level of average profit, short-term holders seem to like to start claiming some of those profits, and as a result, apply sell-side pressure to the asset. Now, obviously, 15% is by no means sort of the peak of Bitcoin's MVRV ratio. We have seen it go much higher. We have seen it go to almost 40% at several points throughout the last 3 years of data. However, it usually just means that we are in an extremely overvalued territory, and these levels of above 15%, I think, never last more than a week on end almost. So usually speaking, when we see Bitcoin's 30-day MVRV ratio rise above 15%, it becomes a little bit unsustainable, and the price needs to normalize in order for these metrics to normalize as well. So yeah, Currently, we're below that 15% mark, allowing Bitcoin's price to maybe, appreciate a little bit more before we once again move into the danger zone. But for the time being, at least, we're out of it. So that's good.
Yeah, and testing out that plus 15% or above range, it looks pretty accurate. We see the correction here, at least a minor one back in April 2019. We see a major one in May 2019. We see another major one in June 2019. These were pretty modest here, but the big extremes like November 2020, we eventually, a few days after had that big drop. And then this huge one here in early January of this year, mid-February, and this one is a relatively minor one now. So we'll see if it stays in this range or if it starts to trickle up if and when we go past 50K again and inch toward another all-time high. So very good metric to look at. I also have a model here that is freely downloadable for people that will show how close any of the notable top 20 metrics, it's going to do a quick refresh right now, how close they are to a danger zone, or actually in this case opportunity zone, or danger zone here on the red line. If it's below the red line, that means it's in a bottom 20% range in terms of opportunity. So it's extra risky. Something like Fetch, which has just been pumping like crazy the last couple of days, it's currently showing an overbought signal. Quant showing an overbought signal. XRP showing almost an overbought signal if it gets below this red line, but still getting close is a concern. Notice how none of them are in the positive range right now, which would indicate that there's even a mild opportunity. And what this essentially does is just measure 6 different MVRVs together. We've got 1 day, 7 day, the 30 day that we just looked at, 90, this tiny one there is 1 year, or 6 months, excuse me, and then 1 year. So it's averaging all of those together and measuring how close each of their respective MVRV danger zones and opportunity zones look right now. With the markets pumping, naturally, most are going to be in mild danger zones. But we only see a few that are really, really concerning. Most are kind of in that mid-range right now. Bitcoin, you see right here, just halfway to that danger zone right now. Ethereum, also right around halfway. So all that being said, I think we can open things up to questions now if it's about that time.
Sure. I can share my screen, Brian, if you want.
You bet.
All right, cool. So, Max, give it to us. What coins do people want us to look into?
I already put some of them in Discord chat. Let's go with VISR Finance. VISR is the ticker name. VISR, VISR Finance.
Okay, interesting. All right, do we have any on-chain data for this coin? Let's see.
I think it's an ERC20 token, isn't it?
So, yeah, we do. All right, good. Great. All right, let me zoom out a bit. Let's see what we got. So VISR. So we're going to start with some basic on-chain metrics that just to kind of get a sense of where this coin is from a network-wide, from a network-wide activity perspective. In other words, is the crowd or the holders of this coin, are they sort of starting to interact more with it, or are we seeing any sort of increase in day-to-day interaction with the VISR token, or is that engagement starting to fall off on a network level, right? One of those is obviously better for the long-term sort of longevity of the coin, and that is essentially what we are seeing right now for VISR. I'm showing here the active addresses for this coin over the last, 6 months. So essentially, the amount of unique addresses interacting with the VISR coin on a daily basis has started and continued to rise, seemingly, from the May correction. So the lowest level that we were at, well, actually, it was here, right, at about 180 daily active addresses. Since then, even though it is a bit choppy, the general trend seems to be on an upside. So let's take, for example, from here to here and see exactly how much its daily active addresses have grown. So even if we start at the beginning of the uptrend here, we can still see that the amount of unique addresses interacting with the VISR token has increased by 62% in the last 4 months. That's great. In general, I think sustained price rallies usually necessitate a solid or a sustainable uptick in a coin's daily active addresses. The reason for that being is that a lot of on-chain analysts use active addresses as sort of a proxy, an on-chain proxy for token demand. If more addresses and more entities are interacting with the token, it points to a growing demand on a network level for the token in question. It also points to a rising use case for this coin, and in general, the amount of value that this coin is creating rises as well. So, there's really no downside to seeing a coin's active addresses rise over time. Now, sort of solitary upticks, like maybe this one or this one, like for example, a spike like this, solitary upticks in daily active addresses can be pretty misleading. Like if there's an airdrop, for example, you will see a spike in daily active addresses, right? However, if the amount of addresses continues to rise for 4 months straight, I think that's a pretty good sign. So at the moment, at the time of recording, there's about 1,800 addresses interacting with the VISR token on a daily basis. This is a rolling 24-hour metric. So let's compare that to the rest of coins living on Ethereum. So I'm going to open up a screener here. A screener is a feature on our site that lets you filter out coins based on specific criteria. So what we're going to do is we're going to look at all of the coins that live on Ethereum, and we're only going to filter out those coins, or actually look at those coins that have more than, let's say, 1,700 daily active addresses, to see how many of those coins actually are at the moment. And so, how high VISR's on-chain activity actually is. So what I'm going to do is I'm going to reset all of my filters. I'm going to look at Ethereum as a market segment. So basically, this will only show me coins that live on Ethereum. So you can see that the total amount of assets goes from almost 2,000, and now it's going to drop to about 1,200. There we go. So this is currently, we're only looking at the assets that live on Ethereum. And the next thing that I'm going to do is I'm going to scroll down here to daily active addresses. And I'm going to say, actually, let's say 1,500. That's a nice round number. So I'm going to say, show me all coins that have more than 1,500 daily active addresses. And that seems to be only 15 assets. Those 15 assets, Ethereum, Tether, Hex, USDC, Uniswap, Axie, Sushi, SLP. So that seems to be a pretty good company for a coin of VISR status to be in. Now, I'm not seeing VISR on it at the moment. That might be because of the fact that its daily active addresses are sort of moving up and down on a daily basis. So the server might not be catching it. Let's see where we are. Let's take Yeah, it's 1,800. So not sure why it's not showing up here at the moment, but it's definitely in the sort of upper echelon of coins that are interacting with, that people are interacting with on Ethereum. So in the top sort of 15 to 20 coins on the Ethereum network at the moment. This is good. I would keep an eye on VISR's daily active addresses. If they continue to rise, it might not mean that immediately there is going to be sort of a massive price appreciation. However, from a long-term perspective, this is the type of metric that I like to look at, and the type of trend that I like to see. So this is as far as its general sort of on-chain activity is concerned. I also want to look at what is the level of sort of sell pressure for VISR coin on a daily basis, and also on sort of a monthly basis. So the way that I'm going to examine that is by looking at two different metrics. Those are going to be active deposits and exchange inflow. So let's start with active deposits. This metric essentially, it seems like there isn't a lot of data for active deposits on Visor. Is this coin mostly traded on DEXs? Because that would probably be the reason why. So deposit addresses are essentially addresses that are being used to deposit coins to a centralized exchange. So let's see, Visor's exchange info. It doesn't seem like we have a lot of exchange data for this coin. Need to check with our devs. Anybody who's asked for Visor, let me know in chat if they're mostly being traded on DEXs, because that could be a reason why we're seeing relatively low exchange-related data here. In the meantime, let's look at, so how old is Visor? Okay, the start date is April 14th. So let's actually look at Visor's 7-day MVRV ratio to see in general how it's changed over time. Okay, this is the beginning, and always at the very launch of the network, its MVRV is going to be extremely high. So yeah, currently the 7-day MVRV ratio for Visor is pretty low, suggesting that on average, the short-term holders of this coin are currently about 10% down on their initial investment. Like I said, or like Brian was saying when we were looking at Bitcoin's MVRV ratio, the higher the MVRV, the more likely it is that people are going to start claiming profits, or the higher the MVRV ratio, the more profits there are that are remaining unclaimed, and as a result, the more likely it is that people are going to start claiming these profits. So we can see sort of some upticks in MVRV ratio around several of local bottoms for Visor, right? So currently it's nowhere near the danger zone, letting me know that even though this is just a 7-day MVRV ratio, and in general MVRV is a metric that is better used for coins that have at least a couple of years of data, it suggests that, you know, its short-term holders are currently underwater, so there's not a whole lot of incentive to sell, and there's not also a whole lot of incentive to be greedy. So there could be, you know, from this perspective, there could be another sort of maybe 15 to 20% uptick in its price action before we move into a danger zone according to its MVRV ratio. All right, let's look at its social metrics. I'm curious if we have a lot of data for Visor. Doesn't seem like it's being talked about a whole lot, at least not on our servers or the channels that we are tracking. Yeah, quite a low activity for VISR on the channels and accounts that we are currently following. All right. I mean, seems like, yeah, I haven't really heard a lot of chatter about this coin in particular. So
we also would have one more smaller coin before it comes to the big ones that are always requested, like Link and Matic.
Okay. Which one?
Unibright.
Oh, okay. UBT. Yeah. We can look at
exactly.
UBT. All right. I also wanted to look at network profit loss for this coin. So this is a metric that we haven't really mentioned today a whole lot. What network profit loss does is it tries to calculate the the total profits or losses of all daily transactions on a Visor network. So essentially, the way that this metric works is that for every coin or unit of Visor that moves on the blockchain, let's say there was a unit of Visor that last moved here. We take the price at which it was moved here, and we assume that this was its purchase price. And then the next time that unit of Visor moves on the blockchain, let's say it moved here, we take the price at which it was moved then, and we assume this was its sell price. So the difference between these two prices on a network level for all daily transactions becomes this metric. And as a result, it shows the total daily ROI of all network transactions. In other words, when there's a high rise in network profit loss, it points to the fact that on average, the coins that are being moved on the network at this point in time are being moved at a significant profit relative to the last time that they were moved on the network. So it suggests profit-taking activity, right? And then when we see these drop-offs, and I'll obviously mention this one in a moment, these drop-offs suggest or point to a point in time where the on average, all VISR coins that are moving on the blockchain are moving at a significant loss relative to the last time that they were moved on the blockchain, or relative to the time that they were acquired, is at least what this metric assumes, right? So this would suggest a capitulation, and this would suggest profit taking. Now, very often for ERC20 coins, we see net profit loss drops occur around local bottoms, and actually here it's almost occurred around the all-time bottom for VISR. The reason for this is the fact that these massive drops in net profit loss suggest that at this point in time, a lot of coins were moved at a significant loss. So it basically, what it suggests it suggests weak-hand capitulation. It suggests that some people, whether it was a couple of whales or in general sort of a lot of retail holders all at the same time, have kind of given up on this coin and are moving away from it because they are expecting further correction. I don't know if this is because they have the coin has dropped below 0.5 here, or whether there was a significant event in the coin's history. Whatever the reason, this was obviously the biggest capitulation event in VISR's history. Since then, the price has started to recover. I mean, we can actually see the same thing for Bitcoin if you really want to compare it to something. Let's look at all time for Bitcoin. Yeah, here we go. So this is the, and actually, let me take the 1-day interval instead of 7-day interval so you can see exactly how big it was. So this was the net profit loss during the correction for BTC. It was one of the biggest capitulation events in Bitcoin's history. And as you can see, several times in the past where there were these massive dips in Bitcoin's net profit loss, here, 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 here as well, they coincided with local bottoms or approaching bottoms and a potential for recovery. So moving back to VISR, definitely not surprised to see this type of a massive capitulation event coincide with the local bottom. Now, because it's so big, it might be worth zooming out of it so we can see what's been going on since. So let's zoom out of this massive drop.
It was just mentioned in chat. Thanks, JP.
Yeah.
Thanks, Muhammad. That they have been hacked, or there was some kind of exploit around that time. So probably.
Oh, okay. So it might be okay. So it might be people or hackers looking to sell a bunch of coins. So good to know. It's interesting that we're not seeing like when I look at it, it's exchange inflow. For whatever reason, we don't have the data for it. I'll need to check with our devs. I would be curious to see what happened with its exchange inflow at the time. But yeah, okay. So if it was hacked, this probably then means that a lot of coins were being. I mean, the network effect is kind of similar, right? A lot of coins were being moved to sell, pointing to a sort of a capitulation period one way or another. Now, if there's enough buy-side pressure on the other side of the aisle, or if there's a lot of people looking to buy a coin at a discount, which it seems like there was at this point in time, then the sort of sell-side pressure can be absorbed and move into a recovery. So let's zoom out of the network profit loss drop here and see what's been going on recently. So yeah, once again, sort of unsurprisingly, we see several sort of drops in net profit loss around local bottoms, like here and here. And we see profit-taking activities around local tops, like here before a consolidation period, here before a short-term correction, here around its local top, and so forth. So while not a perfect metric, essentially what net profit loss kind of tells you is what is the sort of average sentiment of day-to-day transactions on the network. Are coins being moved at a profit, suggesting profit-taking activities, or are they being moved at a loss, suggesting that people are selling their coins even though they are not going to make any profit on them? In fact, they're selling it at a loss because they are concerned about further corrections. And around these times, sometimes like I said, if there's enough people looking to buy the dip on this coin, these sort of capitulation events can move into a short-term recovery for the coin, which is good. Obviously, a lot of coins have been pumping recently, so keep that in mind. So, okay, from a general perspective, I think active addresses for VISR look really good. These other metrics are like it's a young coin. That's why I think active addresses and maybe transaction volume are usually the two the metrics that I pay most attention to. And I think, let's look at its transaction volume. And I think if it continues to rise in terms of its on-chain activity, I think it's going to do good. Yeah, this is the hacking event, obviously. The biggest spike in the amount of VISR being moved on the blockchain. So it kind of everything pales in comparison. So if we zoom out of it, yeah, it's staying relatively stable. The amount of daily value transfer on the network, I would like to see it rise, maybe stay at around these levels or more moving forward. But the fact that its daily active addresses are rising is to me a pretty strong signal. I would keep it in mind. It's not necessarily going to immediately translate into a price appreciation, but it does point to a network effect for the coin. And not a lot of coins have network effects on Ethereum. So when you see one that does, it could be a good sign for the coin. All right, let's look at Unibright. Unibright has been making moves, man. All right. I actually haven't looked at it for a while. Too busy with other coins. All right, so let's look at Unibright's on-chain activity in general. All right, so yeah, Unibright's on-chain activity is looking quite interesting. So there are several large spikes in its daily active addresses every now and again, but you can kind of see that they coincide with local tops. Let me just take active deposits as well. Yeah, so a lot of these spikes in daily active addresses seem to be very short-lived. And when you see short-lived spikes in active addresses, essentially what that points to is that a lot of people or a lot of addresses are actually becoming activated, especially when they become activated during rallies. They're becoming activated in order to take advantage of the price pump and dump their positions rather than any sort of confidence towards a coin. And it's no surprise that at each of these points in time, we also see a pretty big spike in active deposits for UBT, like here, and here around these three tops. So like I said, daily deposits point to or sort of calculate the amount of addresses that are being used to deposit UBT to exchanges. When deposit activity is on the rise, it suggests that more people are looking to sell their UBT. They're looking to move it to exchanges, and the underlying premise is that they're moving it to exchanges in order to sell. So that would be sort of a concerning signal for UBT's short-term price action. Currently, however, it's nice to see that its daily deposits are actually not rising alongside its price. Let's look at its exchange inflow as well, just to confirm it. Yeah, okay, so its exchange inflow is also staying relatively low. What about its supply on exchanges? Declining. All right, so it seems like UBT's exchange metrics don't look all that bad. The amount of deposit activity is declining. The amount of UBT being moved to exchanges is relatively low, and the total supply of UBT on exchanges is still not picking up despite its price action. So what that seems to point to is the fact that UBT's holders are at this point in time still not looking to sell or not looking to move at least their UBT to exchanges, allowing its price to appreciate maybe a little bit more before we see that similar spike in daily deposits, suggesting that all right, the crowd is the holders are ready to start taking some profits. Let's also look at UBT's MVRV ratio, because I assume that it's very high now. And it might actually be a little bit concerning. Oh, right. We don't have the intraday MVRV, but we have the classic MVRV. There we go. Okay. Let's say last year and maybe last 2 years. All right. So this is the last 2 years of UBT's MVRV ratio. This is the 30-day MVRV ratio. So the average profit or the average loss of all addresses that have acquired UBT in the previous 30 days. Currently, the average profit of those addresses is plus 26%. So it's definitely sort of a higher echelon of UBT's MVRV ratio. We can kind of see that the general top or peak seems to be at around 40% here. At this point in time, it seems to become a little bit unsustainable and doesn't really hang around these levels or higher than these levels for a long time. So we're still some ways away from historical peaks. Now we can also kind of see a pretty consistent bottoms for MVRV ratio. Obviously, this was during the coronavirus crash, and the coronavirus crash has sort of impacted the MVRV of a lot of coins in this way, but the only thing that it really suggests is that at this point we were massively undervalued, and so it's not a surprise that the entire market started to sort of recover. But yeah, at around minus 30%, this seems to be a fairly established support zone for its 30-day MVRV ratio. So currently, yeah, we are a little bit, to be expected, right? As the price of UBT rises, so will its MVRV ratio. So we're slowly moving into that danger zone level for, a point in time where, historically speaking, UBT holders seem to have shown a propensity or a tendency to start dumping their position and taking some profit. So that might be a little bit something to keep an eye on. As we approach this 40% level, it's probably going to be, it's probably going to show elevated signs of profit taking. Now, if we look at its net profit loss to confirm this, yeah. Speaking of profit taking, it seems like it's already taking place. So once again, what is net profit loss? The spikes in net profit loss point to a time where, on average, all UBT that are moving on the network are moving at a significant profit relative to the last time they moved on the blockchain. So it points to sort of large spikes in profit taking activity, and so it happens around several local tops for UBT here, 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 and then it's currently happening once again. So over the last maybe 24 to 48 hours, we have seen a pretty significant uptick in the net profit loss for UBT. Yeah, here it is right now, and here it was yesterday as well. So this essentially what this points to is just on a network level, it suggests that UBTs being moved on the blockchain are on average being moved at a significant profit. So this could just be a couple of very large addresses that are moving their UBT, or it could be sort of a network-wide effect. Whatever it is, it's clearly sort of suggesting that some people seem to be taking profits or moving their coins at a significant profit, at least. So this could point to an increased risk of a short-term correction for UBT, as people and addresses applied this negative or sell-side pressure for the coin. Previously, it hasn't really been a positive signal for the coin in question. Let's look at its social volume as well. All right, so not really a whole lot of clear patterns here. Let me see if I can. Yeah, I mean, definitely been on an uptick, the social mentions of UBT. So let's see, since the start of the month, August 1st, all the way up to here, about plus 157% uptick in its social volume. So definitely sort of on an uptrend, the amount of mentions of UBT on a daily basis. Like I said, when I was talking about Bitcoin, not a great sign for a lot of coins. So for example, if you look at Solana, right? And we'll look at its social volumes, because currently Solana's social volume is kind of going through the roof, as you'll see in a minute. Yeah, it's massive. And if we look at previous times that Solana's social volume was increasingly high, it was around this local top here in February, as well as around its top here on April 25th, and then it started rising again, but this was obviously a market-wide correction. So there were several sort of times in the past where Solana's social volume has coincided with local tops for the coin in question. So the fact that UBT's social volume is also rising, not a great sign. So also, its on-chain activity is remaining relatively low. Yeah, it's sort of growing a little bit with its rally, but I think that's it's not, how should I put it? Looking at UBT's historical activity in terms of its daily active addresses, it seems like it's mostly like solitary spikes. And you can already see that this spike in active addresses is falling back down to earth, sort of normalizing. So there isn't a whole lot of probably a fundamental support for the rally if there's not a whole lot of addresses interacting with UBT on a daily basis. And there are a few sort of concerning signals. So MVRV being relatively high is definitely a concerning signal. Network profit loss being super high today is another concerning signal. What I do like is the fact that its exchange metrics are remaining flat. So at least based on the wallets that we have labeled as exchanges, there isn't a whole lot of people still, like on a network-wide level, moving UBT to exchanges. Like there's still not a network-wide sort of campaign to sell UBT, allowing it to, break this maybe into 2.5 and maybe $3. Who knows? So yeah, these would be the negative sides and the potential positive sides for UBT. So take that for what you want. All right, what time is it? I think we gotta stop now. We're at the 15 minutes past. I do want to show one more thing, which I thought was very interesting, which we didn't get to while we were talking about Bitcoin, and I think it actually applies to the entire market. For everyone that we haven't gotten to your questions, sorry about that. We will try to look at some of the questions that you guys posed in chat, and then write daily sort of reviews or recaps of the coins that you guys wanted us to look into throughout the week. So just make sure to go to insights.santiment.net and keep an eye on the insights that we write on a daily basis, because we'll look at the coins that you were interested in and try to do some deeper analysis in written form. Now, one last thing that I wanted to look into, and this is I haven't talked about this for maybe 2 or 3 months, but if you've been sort of on these calls on and off, you will probably have heard me talking about this relationship before. And it is the relationship between Bitcoin and the price of Bitcoin on the one hand, and the exchange metrics for stable coins. So I've got this theory, and not a lot, but I've seen some other people in sort of the on-chain analysis community have this theory as well, where the spikes in the exchange inflow of stable coins, especially around corrections for Bitcoin, seem to be a positive signal. So the idea behind this is that as the exchange inflow of stable coins like USDC and USDT increases, it means that a lot of people or addresses are moving their stable coins to exchanges, presumably to exchange them for more volatile cryptocurrencies. So it kind of is an on-chain proxy for buy-side pressure, at least one of the ways that we can kind of look and measure buy-side pressure for not just Bitcoin, but pretty much everything on the market. Now, if you look at Bitcoin's price action, and I'm going to lock it here, I was checking what was happening with stablecoins during this latest mini crash for BTC. And so what I'm going to show you, let's zoom into the last 6 months so you can see. This is the last, no. There we go. So I'm going to first move into look at USDC, and I'm going to click here on exchange inflow, which is going to show me the amount of USDC that is moving to known exchange wallets over the last 6 months. So yesterday, no, actually it wasn't yesterday, it was 2 days ago. 2 days ago, when Bitcoin's price underwent that correction to almost 44K. Actually, it did go to 44K, right? Yeah. We saw a pretty big spike in the amount of USDC moving to known exchange wallets. And this isn't the first time that USDC has sort of spiked around local bottoms for BTC. It's happened here. It's happened here. It's happened close to the bottom here. It's also happened here, right at the bottom. So there is some precedent to this idea that an uptick in large stablecoins moving to exchanges might be sometimes connected to a short-term bottom for Bitcoin and sort of points to a rise in buy-side pressure. If we look at DAI, we can see a relatively significant uptick in DAI's exchange inflow. And like when you look at DAI's previous spikes in exchange inflow, right around the bottom here, right around the bottom here, right around the bottom here, right around the bottom here as well. Sometimes, yeah, actually around local bottom here as well. So there, once again, is some precedent. We can also see it here to this idea of certain stable coins moving to exchanges and how that sort of coincides with Bitcoin's short-term recoveries. If we look at BUSD, I think we're going to see a similar thing. Yeah, spike in BUSD moving to exchanges around local bottoms for BTC. The one coin that has not shown this pattern 2 days ago is Tether. So I'll show you right now. Is Tether. Actually, it's showing now. Okay, so it may be a little bit late to the party. However, even with Tether, you can see several times in the past that Tether's spike in exchange inflow coincided with short-term bottoms and local and sort of price recoveries for BTC here as well, here as well, here as well, here as well. So the idea here, at least for me, is that these spikes in exchange inflow could suggest that, you know, people consider these bottoms are, or sorry, these corrections are for buying. And as long as they're buying into these the short-term dips, there is clearly a sort of a bullish support for not just Bitcoin's price action, but obviously a lot of other coins price action as well. So it's positive for me to see that stablecoin holders, large stablecoin holders probably, are looking to buy BTC at a discount once it drops a little bit, pushing the price upward sort of in the process. Obviously, it's not the only reason why BTC has recovered, but I like to think that it's had at least somewhat of an effect. So just one thing to point, because I think it sort of applies to the entire market. You know, when you see large amounts of stablecoins moving to exchanges, it suggests that a lot of people seem to be exchanging those stablecoins for more volatile assets. A lot of those are obviously a lot of stablecoins. Most active pairs are with Bitcoin, but other cryptocurrencies are in play as well. So anyway, that's gonna be it for me. Brian, anything to add before we close the call?
Just want to let everyone know we appreciate your support here on our YouTube channel. Continue to spread the word. Give this video a like. Obviously, it helps with the algo. Make sure you're subscribed, and we really look forward to giving some more updates. You'll see some more videos from me and maybe some of our other staff throughout the week on our YouTube, and we look forward to chatting with you all next week.
Max, if you want to just flash really quickly that promo code. So guys, everything that we talked about today and a lot of other metrics that we didn't get to, a lot of other features, everything's available on Sandbase, app.santiment.net. If you're not already subscribed, check out the website and create a free account, and you get 2 weeks free to sort of go over the entire platform and, you know, analyze everything that we've done today for your own. Now, after the 2-week trial, there's a $49 monthly plan. However, with a promo code of that's TWIC, which stands for This Week in Crypto, when you enter that promo code during checkout, you get 25% off Sandbase Pro. So another reason to, you know, I think we're already one of the most affordable sort of on-chain and social data provider on the market. But if you need that extra push, hopefully this does it for you. So we'll be back in 7 days again with a weekly stream. Like Brian said, we'll also be publishing some YouTube content before that as well, so keep an eye on it. Thanks to everyone for sticking by until the end of the stream. Check out our Discord if you want to ask us more questions and you want to join other people in our community talking about the market. So the link to our Discord is in the description of the video. We'll be over there after the call. So looking forward to chatting with you guys more. All right. Thanks, Max. Thanks, Brian. And thanks, everyone, for joining us. We'll be back in 7 days. Till then.
Bye-bye.
Take care, guys.
Thanks, guys.